Let's get started again. It's the real deal. We're going to talk about earnings today, but not necessarily what you do on earnings. What do you do after earnings? Everyone always wants to get in and look at that crazy volatile day. You'll see those crazy wicks when a company reports, like Meta might be up 20%, or you'll get other names that are down 10%, and you think, oh goodness, that kind of velocity and volatility is a one-day sort of thing. Now, yes, the initial reaction to earnings is typically going to be the biggest move, but sometimes the easier or better setups in terms of finding a trade can be after earnings because of the information you get on the price action. That is the key. So what exactly are we talking about here? Generally speaking, about like what is that week after earnings going to be able to tell you, and how can you look to profit from it? So I'm going to give you a couple of examples along the way. First, get an idea of what an earnings move is going to look like, because I'll give you two, one bad, one good, and we'll end with the good one because it's just more fun to do that. Intel, when they reported, squashed. It was in the $50 range. You pretty much ended up testing 43, was double digits to the downside. The guidance was what everyone was talking about. But since then, you have had an actionable trade as it's bad and then trended lower. And we're going to get into how you can look for some strategies after that 2 or 3 days on Intel. And then I'll give you another one we're going to allude to here. Obviously, you've got Meta making that ridiculous move. Well, what do you do? What do you look for as it's starting to settle down? So why do we care about a couple of days after, a week after, for things to settle? Part of that is you're always going to have a lot of big bets made around earnings and a lot of big money reacting to new price action after earnings. So you'll have hedge trades unwinding, people that may have made options bets. You'll have a lot of covering going through. You'll have big money positioning and reacting to those earnings. And all of that you want to settle down and give you additional information so that you can go back as a short-term trader and start finding those key price levels. Now, the most obvious example of this, no questions asked, is going to be when something reports and then stays within the same range, right? So it's going to be very, very obvious to see this. You're not going to have to worry about new price action. And the example I want to give is going to be Apple here. So Apple, despite what anybody wants to tell you, despite what was actually a pretty decent quarter, ended up flushing to the downside. But if you've been watching this stock going into the earnings, you've always had this resistance in front of 200, and you had a 180 bottom which held like gangbusters. I mean, it bounced off 180, made the 10% jaunt up to 200, and then all you did is backtrace it. Now, what do we see happen the day after earnings? Sometimes it's not that complicated. It tries to trade in a new range, fails to break underneath despite there being a negative initial reaction to earnings, tries to trade lower underneath that 180, but the buyers step back in again like they did previously. So what that, I think, tells me is a lot of the big money is saying, okay, not a lot has changed here. It might have been a negative reaction, but the actual buy the dip mentality at 180 that was there before is there again. So how do you want to play that? Well, you want to look for additional strength to just do what it did in the past. Now, if it's going to bounce off that 180 and go higher, the first thing you want to see, hold higher lows and trend back up. So you're not expecting in a case like this, if you think that 180 is good, getting in at 180. Like, why would you, if it gets back to that price? I mean, no, you don't want that. You want it bouncing higher, hold the higher low, which is exactly what Apple ends up doing here for the continuation play. It holds 185 on the reaction. It holds 186 on the morning the next day. And this is in the face of a weak market. As I'm talking about this is 1.2% to the upside into a red NASDAQ and a red ES. So it's showing you that relative strength. It's showing you that higher low because nothing has changed. 180 is still good, and therefore the stairs still lead to the upside. But that's not how it's always going to be. Sometimes a dog is a dog. And when there's a negative reaction to a stock, you want it to be one way, it's the other way. Just like Marlowe said in The Wire. And I can want, or anybody that owns Intel can want it to go up, but this had a negative reaction to the downside, and it did everything it could. It held 43, which was the earnings bottom. It held it the first day. It tried to hold the second day. Does it hold? Nope. Doesn't hold that bottom. Closes on the low again on the third day. It tries to break up on the fourth day, and it cannot stop making lower tops even when it had a strong day. So it tried to settle down. You do not find a defined bottom anywhere alongside this. There's a chance it just did it here. But once you see that the first couple of days and closing on the lows, you start thinking short pops into resistance. It tried to hold the earnings bottom. Tried, failed, tried, failed. So you want to look to join that short-term trend by shorting the pops in Intel, which has been good as long as you are patient with it. It's not screaming to the downside. It is gently, nicely, and calmly falling whenever it catches a bit of a bid, which requires a little bit of patience, but that wasn't necessarily obvious until about that third day when it eventually failed that initial low on earnings. So Apple, first reaction when it tested previous support which was to hold it immediately, then it stair-stepped to the upside. Intel was immediately challenging the bottoms. In that case, you just look for the gentle trend. It's not falling all over itself, so you want to short highs instead of bottom breaks in that situation. Cannot say that enough. In a gentle trend to the downside, you want to be shorting off of resistance levels and pops. If something's going gently down and you keep trying to hit the low of the day, well, it's not moving enough when it's making those fresh lows. Maybe you get something at the open, but the better play is to wait for the pops and then short the pops in front of resistance levels. Be very, very patient about it. Now, what do you do as something is going? I'll give you a Meta. Meta is a great example of it still hasn't figured itself out. Now, the bigger the move, the more difficult it might be for the stock to calm itself down and figure things out a little bit. There's no better example of that than Meta. Meta was 20-something% to the upside. It continued to go higher even after gapping up. It then holds like $450 and then goes all the way to $485, and this was underneath $400. So you have no levels in sight. You've got no reference in sight. It's a blue sky setup, and it requires a lot of patience because it's easy enough to say, oh, yeah, well, it failed underneath its previous close. Let's just look for the short. Yeah, you can do that. And there's going to be other trade setups that are out there, like when you find exhaustion in the middle of the day, or you can find VWAP holds, those kinds of things. But when it comes to establishing a big level where you can work off of it for a couple of days, or maybe a couple of weeks and months, which is what Apple gave you, Intel gave you a clear trend, this hasn't set that up yet. But it does give you a few reference points, frames of reference that I think we can start to look at. One is obvious. That's going to be where it bounced. On earnings, 452, which I think you work off the 450, so it might establish that as support. And the other one's a little bit hidden. There was price acceleration as it broke through 465. But this is where I'm going to start watching a very specific range in Meta. Acceleration after earnings, 465. Today, when it fails the previous close, where's the resistance on, and as it holds the bottom? Right back there at 465. So the breakout price on Friday in reaction to earnings has turned into today's resistance. Suddenly, you've got yourself a workable range with Meta. You got 450 at the bottom. You got 465 up here. So I look to that range to give me a reason to either start working longs or working shorts. The longer 465 holds, if it holds that and puts in a lower low this afternoon, a lower low tomorrow, then I'm thinking shorts back into 450. If today that move already exhausts into 450 and bounces, then we've got ourselves a bit of a double bottom, and you can start to even look for some longs off the 450 level. Inside, I'm not touching it with a 10-foot pole. It's a volatile name. Just because it's only like 2 or 3% here doesn't mean it can't move more than that. So you're still waiting for this to calm itself down a little bit and give you some better opportunities in terms of levels like the Apple one. And I can't say enough about that. Like the levels on Apple, that 180, it was clear right away, and it gives you an opportunity to start looking for some longs. Now, we got to talk about Tesla. here for a split second. And let's ignore for a second 175 at the bottom. Yes, it's a good trade, but I want to talk about Tesla in the other way. Because anyone that knows that the trend has been to the downside on Tesla. And a lot of the EV names have been exactly this way. And I'm not just talking about 2024. This was in a downward trend for the greater part of the second half of 2023. You can see a clear downward trend. When they reported, it wasn't well received at all. You had a gap, you had a big move to the downside, and then another gap down. What at least had happened immediately was it did what Apple did. It held a key 180 level. And then you got a nice bounce back in almost exactly what Apple did. Held 180 into 195. Now, there is a difference between this getting back to 180 and what happened to Apple. Now, Apple established the 180 level previous to earnings and bounced immediately off that level. Tesla did precisely the same thing, but the upward trend, because they reported earlier, had exhausted itself. On a retest, the trend just continued to go back through. And that is the big difference here. Apple got to 195, went back into 180 and held it. When it broke the 180 to the downside, I didn't short it. I know I should have shorted it. I slapped a fail on myself for not shorting it. If the previous trend holds, and you get right back and show no defense of that 180 level, you got to look for the reversal trade. Why? Because when a big level was established on earnings and the trend is in the other direction, well, you better darn believe when it breaks, it's going to be a wild one. And you can see that with the explosive price action. Now, this plays both ways. It's actually exploding on the way back up as we speak. But that 180 level was great when it broke if you were trading to the short side. So when you look at Apple, if Apple doesn't get past 200 again, and then we retest that 180, it's a great level, but when you test it the next time after earnings, you can't just assume it's going to hold. It's a good short-term trade when you establish a level post-earnings, but it doesn't mean it's going to hold forever. Tesla is a great example of that. Now, there is a distinction between Tesla and Apple in that Apple was in an upward trend for the last year. Tesla, the last 8 months, was in a downward trend, which is exactly why you got to look for that breakdown at 180. Allow a stock to calm down. Even if it does 10, 20% on earnings, you can capture 1% moves like Intel's been giving you. You can capture 1%, 2% moves like what Apple has been giving you post-earnings. Allow it to establish a level. Meta hasn't done that yet. Apple did. Intel did. Tesla did. The trend is your friend, and when big levels emerge, then as a trader, you can start to go in there with a little bit more confidence. And anybody that saw Apple at 180 knows exactly what I'm talking about from Friday. So post-earnings trading isn't just about hammering it the next day and getting big winners. It's about establishing key levels that you can then patiently work off of for the next few days and weeks. That's the real deal. It's post-earnings trading, because there is always something that you can be looking for that will advance your trading strategy. And it's not just about getting the big, exciting on the day of earnings. A lot of times, it's that 2, 3, 4 day rule, and when things settle down, that you can take advantage of. Just look at Tesla go. That's the real deal. It's post-earnings trading, everybody.